Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for November 30th, 2022. Sniper trade of the day. I'm going to just refer to yesterday's market health check. So, this is the SPY on 30-minute bars. And yesterday we looked at, this was the 1 day frame yesterday. We said any breakout above the descending PSAR could easily lead to a 1 day move to the PSAR flip, the 10-day high, and then the next critical resistance level, which was a price target that we had identified 4 weeks ago, and we've been monitoring ever since. We also said that in this compound critical state, that a breakdown below the daily low could also lead below the, which was also the 5-day low, the 10-day low, and could be a large move to the bottom. So this is a compound critical state, perfectly postured for explosive moves. That's what we said yesterday. We said a PSAR flip is the first sign of what could be a decisive and explosive move. And then we said a break above the peak of the RL10 could be decisive. That's what we said yesterday. Today we get this move. In the morning, it just opens in a regular sideways channel. We then get a PSAR flip. I wait till it breaks out of yesterday's box. I buy the entry with a standard risk box. As soon as it breaks that high on the first bar, I can get my risk out, and then I can start managing the stop up the stack. So I've got about 1 minute of open risk on this trade. Yeah, but Ken, it's FOMC is talking today, and there might be a lot of volatility. Exactly. Volatility is your friend if you know what you're doing. So, when this breakout happens, you buy the breakout with a minimum manageable risk box. You quickly get your risk out. Get your risk out. And then just manage the stop. Be prepared to exit when it gets to resistance. Where was resistance? Right where there was previously resistance, where we said. Not surprised to see a little resistance and people taking some profits here. No significant pullback compared to the stop, and then when it breaks out, it has another nice big run when it cleared the previous resistance level. So going into the close, I exit, your mileage may vary, I exit 80% of the position. I bank the gift. I'm open to renew the position tomorrow if we get a directional move. Very good chance of that. And I'll sleep soundly tonight. That move, the 20% overnight risk, is funded by the market's move here. No risk to my initial capital. Sniper trade of the day. Tesla, the most important symbol in the world right now, has had relative strength for 3 days, which is strong. So I'm prepared to go long only today. There's the OR3. I buy the breakout, standard risk box. instant scratch. Check or hold? What would you call that entry? Caught a 2. It gets interesting if it breaks above that price level. Notice that the RL10 always flips right where the peak of the R10 is. Why? Because the PSAR that we use is geared off of the value of the RL10. So it will always mathematically flip to exactly that level. A breakout above that level is significant. Instant 1-hour loss. I'm committed to the long side on this one. So I notice that and just say, well, I'm not taking that today. Uh, I treat this one as what kind of a pattern? SSC. Why? Because it's got lower lows. And that looks like my harsh winter, PSAR flip, standard risk box. This price level here is the first place it gets interesting. So this entire space here is the tactical space. All I have to do in the tactical space is get my risk above my entry so that I can get my risk out of the trade and I can get that little no lose plus dinner for 2 trade. Scratch. It's supposed to work right away. It did not. Scratch. What would you call that trade? SSC. PSAR flip. Standard risk box. It doesn't get interesting till it gets above this price target. Keep that one in mind. So this is still the tactical trade space. It's noise in there, but it may be to my advantage. And all I'm trying to do is get my risk above my entry level. I want to see price up in this area, this area here, so that I can get my risk out. Now it's interesting. Somewhere in here, I got to get my risk out to about here, and maybe I'll just track the PSAR from this moment on. When it breaks above that interesting price level, and I put the second position on, I probably want to get my stop to here. And now I want to get my stop above that as soon as I can so that I can lock in a no lose plus dinner for two wedge on the second position. The first position is already 2R in hand, so I'm on the verge of having a good day here. Check or hold. Standard exit at the piece RL10 crosses through the dragon. Notice the first alert was the R10 crosses over the baby dragon. From here onward, the R10 was above the baby dragon the whole way. The dragon was just cruising along. There's his spine, and now it rolls over. The R10 rolls over, and everything meets at the piece R. So you just get out, and that's 6R on total two positions. This one was 4, and that one was 2. What would you call that entry? Cotta 2. A low, a higher low. There's almost an R10 wiggle there. That little rising ladder of higher lows makes this a Cotta 2. Standard risk box. It will get interesting if it gets above that support level in the same way that this got interesting when it got above that resistance level. This acts like a lid, keeping everything down until it breaks out. Notice when it breaks through that statistical level, the first move beyond that works is big. Could you have gotten that? Yeah, but it was only 1R in hand. And now when I get this confirming Cotta 2 and I'm in the last little bit of the day, why not exit 80% of the position, keep 20%, basically one unit of risk with an overnight stop of about here. And that R is funded out of the -1, +6, +3. So we're at +8. The 1R overnight that I'm risking, I just take off the top from the 8 of market's money that is represented there. Sniper trade of the day, Tesla. But Ken, the FOMC is volatility. That's what you want. You want volatility as a day trader. You have to have volatility. All right, here's our 150-day look now. So here's our 30-day. Then each of these other stacks is another 30-day chunk. The purple line that you saw when we said it was significant that we carried forward, that one goes all the way back over to here. When that resistance level breaks, that's what triggered that next pop up. So now we're tracking this one, which is support, breakout, the bottom of support here. So that's the next significant price level going back 150 days. And then it's this one. When that broke, big down. So 420-ish, that's going to be huge. And then 430, top of the dragon, and then, or 425, and then 430, peak of the RL10. So now we're in proximity here. So leg 1, pause. Leg 2, shallower pause. The start of leg 3 could take us to 420 very easily. We could get there tomorrow. How do you know? Because I know what the range stat. Here's how far we moved today. Another one of those tomorrow could get you above 420. And you're not allowed to be surprised if it does that. How do I know that? Because the range stat in the S&P is $9.50. The R10 MMRB is $1. So this thing can move $10 tomorrow. $10 from 407 is 417. It can easily get up to 420 tomorrow. The 30-day look. Again, here's our 30-day bracket. Here's our 10-day, 5-day. The 5-day range is almost as large as the 10-day range compared to the 30-day range. We are well at, and we're at the very top of the 5, 10, and 30-day range. There's a nice little PSAR. To me, you got to take the top of the RL10 right here at 400 and say, look, I cannot, if I'm still holding positions up in here, I cannot let it go back below this, because that resistance level should now be a support level if this is going to go. So that's my logic for keeping that as a solid support right here. Just call it the top of the dragon. That should now be a support level if the hypothesis is true that that's going to go. Hey, well, what if that breaks? Well, if it gets below the dragon, I'm certainly can be short here with targets of 1, 2, 3, 4, all the way down to the 30-day low and all that jazz. And that's our 1-day. Here's our 1-day look on 30-minute bars. That's what today was. That's what the last half hour was. So any breakout above this is good. If it gets above 411, look out above 417 is in play. All right, look at our indexes first. Here's the S&P up 3% today. Tech was the only one better at 4.5. And as we said, tech was postured to take over leadership if we were going to see large moves up. Sure enough, emerging markets at 2.9, the Russell 2.7, diamonds 2.25, treasuries even up at 0.74. What was worse? Brazil, oil, materials, lumber, real estate, blended commodities, Mexico, staples, finance, commercial real estate, agriculture, lumber, well, all of the defensive plays that had been stronger than the market and tech all lagged today. Even though they had nice moves, they just didn't have as much. They were selling that today, pieces of it, to add to the winners. Who were the winners? Well, first of all, let's see our metals. Cliff and U.S. Steel and Alcoa. Alcoa, a big winner because that's the biggest name. But Cliff and U.S. Steel were lagging along with the rest of it. So I would expect in the metals tomorrow Alcoa to have more exposure to broad market upticks than the narrowly focused Cliff and U.S. Steel. Devon Energy lagged a little bit. Our semiconductors, Texas Instruments, and Intel were okay at plus 4%, but we'll see in a minute that, NVIDIA was the big winner in tech, in the semis, at 8%. All right, so let's take a look at the upside today. There's the S&P again, baseline at 3%. Wheat and precious consumer discretionary 3.5%. Biotech 4.5%. S&P Tech 5%. S&P Tech was better than NASDAQ Tech. That's telling you people were hitting the largest, safest, maturest companies like Microsoft and Apple hard. Lithium, uranium, Bitcoin, clean energy, Ethereum, 5 to 6%. Arc Genomics and the FANGs. Boy, is that ever a vote for the big Uber corporations that own the world and our souls. 7%. Arc Innovation, 7.7%. The best performers, Rivian, Squarespace, NVIDIA. Boy, is that a screaming signal of where the strength is. The safest bet in the world going into tomorrow. Being prepared. Microsoft is pretty safe. And Apple. Traders. So Nolan, this is on AMD. Didn't take it because it's not 1 hour to the open of the day. I don't know what that rule is, or where it comes from, or how you've tested it. What I do know is that here's the opening range 3. It never got above that. It then fell over. There's the peak of the RL10. There's where it crossed the baby dragon. Here's where it entered the dragon. Here's where it left the dragon. Here's where the PSAR flipped. And so what you do is you take the high of the day and then you drop a range stat off of that to determine what is the reasonable downside move. What's the range stat in AMD? Well, let's go find out. I think it's a member of the S&P. I hope it is. AMD, his range stat is $4.20. So that means that if the peak of the day is here at 75, it can go to, let's see, 75 minus 422 is it can go to 70, 80 on a reasonable move. So an entry here at 73.60 could fail to 70.80, which is $2.80 of potential reasonable reward against a risk box of 74.40, which is 80 cents. So your risk box is 80 cents. Your potential gain is 280. So that's 3.5 to 1. So the risk reward there is clear. And now you have the strongest possible signal right here. Or this one, if you take the collapsing dragon here, you can take that all day. Now, if you get either one of those and it gets this far down, you should never lose money on that trade. I don't mind this going short. I like the recovery. I think you could take that long, but this is reasonable. Good scratches, and now you're running out of gas emotionally. But this is okay to focus on Tesla afterwards. That's fine. But this is the lesson I want you to learn right here. I don't know what that is because it's not 1 hour to the open of the day. Don't know what that rule is or where it comes from. Tesla, reasonable. Yeah, that's okay. This is chopping around. This is all chopping around in the river. There's your PSAR flips. That's 5 trades in there. You saw how I traded it already. This is excellent. That is the winner right there. I like the cash and then the re-entry. Satya doesn't get this, but still makes 2R in the chop. Nothing wrong with that. I don't see anything wrong with this entry. You're above the peak. That's essentially where I put that second entry on. There's nothing wrong with that. Nothing wrong with that one. On this re-entry, and you're that far in you can't let that go negative. And we could be short here. I accept that, no will for that. That's fine. Study the one I did and provide it. Luke, shifting some attention now away from the Aussie over to the DAX on the 2-minute. I'd like to see you here short. This one that's like a CD. I will accept that. But on this one, you got to be out here on a 1, 2, 3 and not take this extra gyrations. Here's your PSAR flip. That's your entry. That would be the perfect one. That's pretty good. Had to take profit. Okay, if you have to. Amazing discipline not to re-enter, but you could because you're above this anyway, so there's still room. That's where I want to see you getting short. That's pretty good. 1, 2, 3 exit finally. Yes, well done. 2.5 on a brand new symbol. So this is a guy that has traded Cliff for 1 year exclusively for about 1,500 trades to learn his craft. and then traded the Aussie dollar for another 1,200 trades or so on 5 minutes, and is now expanding to the DAX on 2 minutes in order to get some diversification from those two and better suit his time. So this is a pretty good start. Much respect. Dashboard 1. Sideways normal. Very powerful. Almost everything above the 50-yard line. So that's good. Still room to the upside. Risk on. Abnormally good. All of the healthcare and now some financials are coming online. I think it's tech, Tesla, the semis, and especially Nvidia. And if you got to play the metals, start with Alcoa. That's what you need to see. The releasing of the steam and off it goes. That cluster right in there is pretty strong. Alcoa and Apple are safe. Microsoft, I add that to your tech stack. Alcoa and Microsoft. Those are the two safest trades ever right now. The ETFs, you throw a dead fish in there and it's going to hit a great looking trade. Weakness in energy. Strength in tech. No squeezes at all today. No Godzillas because of the break up. Some huge one-day movers in there. This should get your attention. Google, a 3.5 sigma move. Microsoft, 3 sigma move. Intel, 2.9 sigma move. Texas Instruments, 2 3/4. That's what you need to know. Now let's look at this one again one more time. There we go. Winners continue to win. Everything that's in the 90-day breakouts, those are feeling good. The euros, diamonds, healthcare, metals and mining. Tech has the most room to grow. Look at that. It's still early days for tech. That's just day one after 6 weeks of underperformance. That is decisive. Yeah, the slope is up. As you can see, that slope, Z-score, is this. But there's room for it to go higher. And we are really stretching to the upside away from with respect to the 200-day moving average. This is as good as it's been in the last 180 days. So there is some positive emotion associated here. You need to know that about the herd. It's ready to run. Here's the price swimming through the river. Between the red and the green line is the river. Little dragon peeking his head out, and up we're going to go. 430 is in range. All right, that's everything we got for today. We'll get this published and posted. Be ready for it tomorrow. Tomorrow's going to be a large range day again. Just don't know the direction. Sideways normal.